Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Yes, the stock market is closed. Actually, the futures markets are open, but I would not in any way recommend trading today, and certainly not after 11 a.m. So a lot of folks ask, Rob, what is going on? Today's a bank holiday, but yes, only in North America. So Canada is closed, the US is closed, the banks are closed. But you'll see that there is still some trading going on. There's a candle here for the 20th, and well, I should say it's for the 20th, but you'll see there's activity right now. It's low volume. There's not a lot of opinion. The banks aren't open, but it does give us a chance to kind of figure out where this very, very early, if certainly limited opinion is playing out. And really, to no surprise, and I don't think anyone here is thinking it's time to sound the alarm. We had a down day on options expiration, right? On Friday, I talked about how OpX is its own little psychology. And what I alluded to was the fact that something is ending. Whenever there's an abrupt end, could be the end of the day, week, month, quarter, year, right? The options are ending. So if you want to throw in another end of something psychology, it's the third Friday of the month. Now you might say, but Rog, we have so many options that expire throughout the month. Yes, it's borderline bonkers, but 0 days to expiration options have definitely left their mark. That psychology, that abrupt end is going nowhere. However, there's still that huge amount of volume that's associated with the third Friday of the month. So it's another end of psychology. Ask yourself about these things. What other end of type psychologies are there? I'll give you another one that a lot of folks don't think about. Dividend dates, the end of. Oftentimes you'll see movement at the end of that dividend window. So ask yourself, how many of these end of dates am I not paying attention to, and how many opportunities to take advantage of the end of, right? Now, the only thing we're not going to trade, and the bots here joking, what about the end of the world? Oh, bot, according to most market analysts and more than a handful of traders, the end of the world is almost an annual event, right? I mean, cue the REM music, right? Go ahead and cue it. I know, there's your earworm for today. So, is there an end of world trade? Oh my gosh. Hilarious. So, always remember the psychology is something wraps up. And that's something we were looking to fade on Friday, meaning I don't like to fade Friday. That's something that it's an old saying in trading. Don't fade Fridays, meaning if there's strength, don't sell into it. If there's weakness, don't buy into it. But options expiration and the exaggerated movement that has this tractor beam effect with these open interest levels where the put side and the call side are really, really active, right? Remember that in terms of the way in which the psychology ends, come Tuesday, not Monday this week, but come Tuesday, that's old news. That's ancient history, right? So that's one way of looking at it. Are all of these certainties? Oh my gosh, right? Probabilities. Yeah, we're not here to predict anything. I don't have my crystal ball here, as I like to say. It's been in the shop for 32 years. And we'll play probabilities. And the probability is the end of psychology is not necessarily something that continues. What we do have is a trend that continues. And whether that's financials, in fact, let's do this right now. Do I have my browser? I don't. Hang on. Let me bring a browser window open. And so I'm gonna take us on over to a site called Koyfin. You can do this on your own, Koyfin, and Koyfin. And it's a free site. You can also pay. They have different services. I'm not saying you need to use anything but the free. It's a fantastic service. But what you want to do is check out, and I got to log in. Hang on one sec. You know what? Let me grab this because I'll show you what it is that. Here we go. I'll show you what it is that I'm actually looking at. So I'm going to go to Koifin, and I'm going to go on. Actually, I'm just going to log in real quick here. There we go. And I'm going to take a look at, bear with me here. So what I'm going to do as I get to Koifin, just so everyone knows, you can do this on your own. All right. When you log into Koifin, or whether you're using it, just the link, go on over on the left side to market dashboards and grab the US sectors. We do this regularly in the Sector Secrets Mastery. How are we finding things that are outperforming? It's really easy. We look for them, right? We don't presume. We don't trade our favorite stock. We don't chase the news. We don't trace the hot stock of the month. By the way, can you imagine if life was merely about chasing the hot stock of the month? What if there isn't a hot stock that month? Then what do you do? All right, we've got to find those boring names. As I like to say, world's most boring trader. We have to find those boring names, those boring sectors that are just sort of grinding higher or lower. Right now, since we have a dovish pivot coming from the Federal Reserve, we want to find stuff that's grinding higher. Take a look at anything here above the zero line, right? So along that right side, from the top to bottom, above the zero line, it begins with SMH, and right now it ends with ITB. And that's where I want to look for strength. And some folks might say, but Rog, what about all this stuff here? Doesn't mean just because something's at the bottom doesn't mean it's going to bounce. Doesn't mean that it's going to have a tremendous amount of follow through. Remember, a lot of traders, your typical retail trader, 90% of the trading and investing public, what do? They sell things as they're moving lower, and they buy things as they're moving higher, which is fine until you're the last one to do either. And then you get caught holding the bag holder. We even have a name for it now. So instead, think of it as a river. If the river's flowing this way, and a river is a phenomena that neither you nor I on our own is going to change, right? So if I know the river's flowing this way, why not just hop on board and just go with the river, right? In scuba diving, we always remind scuba divers, we always remind our divers, when you're starting off the dive, go against the current. That way, at the end of the dive, when you're tired and your tank is low on air, the current's going to bring you back to where you started. So same thing. Let the nature of the market do the heavy lifting. And this is how we find the nature of the market. Are semiconductors continuing to outperform? Oh, gosh, yeah, right? Our communications continuing to outperform. Meta, Google, healthcare, financials have been in fuego. Even two sectors that I normally wouldn't consider when there's a lot of risk appetite, staples and industrials. And yet there they are above the zero line. When you're casting your net into the water, make sure that's where you're looking. And that is what we do. If that sounds the least bit interesting, if that sounds like something you have not been doing, that sounds like something you want to learn how to do more of, hey, gang, I want to make sure no one says, Rog, we didn't know. Okay. Sectorsecrets.com. The trial offer ends today. That's it. We close it. And this isn't, gang, I'm not trying to be all, hyperbole and stuff. The reason we end it is we have a very curated month ahead of us, whether that be the indicators that we're making available. We've never done a curated trial of daily price movement ranges before. That alone is the $7 justification, right? HPMRs, DPMRs, a number of indicators that we use in the mastery. The reason we end it is because now I can take folks who said, yeah, Rog, I want to have that immersion for a month. We take you on that immersion, right? And that's why we do what we do. We do this about once every year, 12, 14 months. So we can really take the folks who've said, Rog, I'm willing to put the commitment forward. Those who said, you know what, I'm willing to forget whatever it is I've learned before, and I'm gonna immerse myself in something that we see is working. So that's why we do it, gang, and that's why I'm being so adamant about it. It ends today. All right. So please, 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 if it's something you want to go ahead and kick the tires on, don't dilly-dally. That's all I'm going to say. That's a my mom word. Dilly-dally. Why are you dilly-dallying? All right. So that's how we find where we're going to cast the net, right? Where are we going to find those next batch of relative outperformers? If you've never done this before, this is something you can do right now. Koifin.com. And actually, the link is /SETF. That's their sector relative outperformance. Take a look at QTD. That means quarter to date. Now, let's say you're day trading. These are things we do in the mastery too. We can do the same thing for the year. We can do the same thing for the quarter. We can do the same thing for the month, right? What are the month relative outperformers? What have we been doing throughout 2024 as we start going into March? One of the things we'll start to do is contrast quarter to date to the month. What's really come on at the end of the quarter, because it's the end of something, right? There's a psychology coming up. So that's it. Yeah, it's the end of the offer. I love that. I love that. All right. So let's go ahead and take a look at what we've got going on. And by the way, gang, that means when I'm looking at this kind of information, I'm not looking at meme stocks. I'm not looking at stock. And I want everyone to know this. If you're looking at meme stocks, unless that meme stock happens to be heavily weighted in one of the sectors, heavily weighted in one of the indices, if you want to chase whatever the headlines are running for, please, 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 this is not the place for you. Neither Charts nor Coffee, Top Tier Outlook Show, or even the Master. I don't want to waste anybody's time. If something's gapping up and that's what you like to look for, please, this is not the place for you. I don't want to waste anybody's time. All right. So let's get to it. As always, let's go ahead and take a look at our questions. Sam asked, was it the end of the world 2022? I think so, right? 2023, because I guess there was a yield curve inversion. Yeah. How did that work out? Anyone running around talking about yield curve inversions, everyone can step back and see how misguided and clueless that is, right? We call it out. There's no dogma around here. How about the equity markets can't rally with a strong dollar? Right? So let's let that stuff go. That's what I mean by if you're going to come into the mastery, you got to let some things go, because if they worked, they would work, right? All right, very cool. All right, watch Dumb Money this weekend. Was it good? Was it good? Insight into Wall Street, Main Street. All right, in Trading Psychology. I haven't watched it yet. I watched something called The New Americans or something. It was about day trading, and it was likening it to how a certain age group who kind of was raised on gaming and now has access to Robinhood and sort of their saga. It's on Netflix, and I watched it. And one of the things I really appreciated about the end of that documentary was that they went back and looked at I think it was 6 different traders and what they're doing now. And you know what they're doing now? They ain't trading. That's what's really interesting. So there are certain windows of time, like 2020, where everyone's a trading genius, right? What I want to know is, what are you doing after 2020? And for those of you that remember the tech boom, everybody was a trading genius, right? 1999, 98, 2000, everyone was a brilliant day trader. And I remember the folks who don't learn how to actually trade and not surf an uptrend, when the trend is over, so is their career. And that's what I mean about, let's not jump into meme stocks and whatever's hot right now, because those are very limited opportunities. And those are not things that we can take at scale. All right. So Jack is asking about Dash and D-Dog. Okay. So Jack, of course, if you're watching the show, these are not stocks that I will look at as a general rule for trades. I'm happy to do so here because the indicators still work, right? You might say, Rog, but these stocks you would trade. They're not. They're actually not. Maybe D-Dog, depending on the weighting in the sectors that matter, but it doesn't matter. Quite frankly, it doesn't matter if it's SMCI or Dash or D-Dog. The indicators still work, right? Do I have an uptrend here? Yes. Can we take advantage of a mean reversion? Absolutely. Right? So those are things that you might say, Rog, but you're not going to cover these. You're not going to see alerts from me. However, to Jack's question, and Jack's in the mastery, Jack's going to say, Rog, I know you don't trade these, but the indicators still work. They do. They do. So when I have a pullback to the 34 EMA wave in a trend, now D-Dog, I'd say, yeah, your path of least resistance is to the upside, Jack. So that's a decent one. But I like your Dash idea better. The structure is better, right? The structure is better. But here's a challenge. If I'm looking at Dash or D-Dog, here, let me show you what I mean. I mean, the markets are closed. Let me show you what we mean. Because a lot of folks sometimes say, but Rog, you don't trade a lot of the things that everyone else is trading. Why aren't you not talking about whatever's making higher highs every day? Because that's not how I built my career. My career is built on those heavily weighted stocks that are going to be here tomorrow. They're going to be here the day after. They're heavily weighted. They're what move the S&P and the NASDAQ and the Dow and the Russell. What are those sectors that are always going to be influential? That's what I like to focus on, the steadiness, right? So let me show you how we could break down a sector and ask ourselves, well, Rob, how do we know if we're getting into something sort of meme or not, right? Kind of meme-like or not. So this is something we do all the time in the room. I'll give you a little insight. ETFDB. You can do this through a number of sites. I like this particular. I don't even know these folks, but I like this site a lot. So what I'm going to do is I'm going to go look at DDOG, right? Where is DDOG weighted? Is it weighted in things that matter to the broader averages, right? Simply being a tech stock is not necessarily going to be that important. So take a look. Wisdom Tree Cybersecurity. Am I seeing any QQQ, SPY? Am I seeing any XLK, CLOU? Am I seeing any SMH? Those kinds of things. The things that are heavily weighted. No. So all this means, and it doesn't mean it's bad, right? No, am I saying that? It's disconnected. So DDOG can do its own thing, which is neither good nor bad. It can just simply do its own thing. It doesn't necessarily have to move with the broader averages. Let's do the same thing with Dash. They're perfectly tradable, but we have to remember that they're going to do their own thing. So leisure and entertainment, right? We have, again, none of these are going to be sectors that are going to influence the broader averages. So you might say, but wait a minute, Rog, here's a QQQ, right? Please be aware that equal weighted share ETFs are great if you're looking for consistency at scale. And I mean 5, 10, 15 years. If you're looking to take a lot of the dips and frankly, some of the rallies out of your P&L, if you just want a little bit of steadiness, the equal weighted is good. Other than that, equal weighted in terms of a reflection of what's happening broadly, and it blows my mind that traders don't know this. It is absolutely not in any way the NASDAQ. You might say, but wait a minute, Rob, it says NASDAQ. It's the NASDAQ stocks, right? It is NASDAQ stocks, but let's liken it this way. If we're making cookies, does anyone here think the ratio of baking soda and milk and sugar and flour are equal? Can you imagine what that tastes like? Yeah, no, my stomach just did a flip-flop. It's going to taste awful because that's not how you make a cookie. Same thing goes with the indices. They are all those stocks, the ingredients, if you will, are not weighted equally. So any thought that an equal weighted index is in any way an edible cookie is absolutely incorrect. So be careful. However, where is their value in something like this? If you've got a long term account, you want to throw some capital into SPY, and you want to take those sharp ascents and descents out of your P&L, you want a steadiness, these are nice for that. But on those really strong years, unless it's a rising tide lifts all markets, these are not going to outperform. And that's not their job, right? That's not their job. So please know, this is not the NASDAQ in the real world. It's the NASDAQ stocks, but not the NASDAQ proportions, right? So be careful thinking equal weighted anything is really of value to us as traders. It's not. It's not. Investors may be, traders, yes. So you might say, okay, Rog, but it's in this. Yeah, but that's not really going to be all that helpful. And you'll see a lot of these stocks are stocks we know, but these aren't necessarily heavily weighted stocks in the NASDAQ. All right, let me just humor me one more time because I will tell you, gang, this is where traders get into trouble. They're not comparing like things. So this is the QQQE. All right, QQQE. Let's go take a look at the differences, right? So I'm going to put QQQ, that's the NASDAQ 100, with this QQQE thing. And forget whether or not it's liquid. I didn't even look at the volume. Let's curious what the volume is. Let's see. All right. So let's see here. Holdings. That's what I'm really after. What are the holdings? All right. Let's compare. Look at the difference. Look at the difference. This is the NASDAQ that we trade on the left. That's what moves it and in order of weighting. Look at the equal weighted thing. Does anyone think CrowdStrike's a major mover within the NAS? What about Fortinet? What about DoorDash? Right? Mongo. So do you see how the ingredients are completely out of order? And then look at the value, right? All of these are weighted very equally. So while NVIDIA is number one, it's only 1.45%, right? While NVIDIA is 5.31%. So if NVIDIA is on a rocket ride, which it is, which one do you think benefits more, QQQ or QQQE, right? And there's a lot of equal weighted type ETFs out there. So I'm just showing you all things that I just don't want to say because I said so. Only our mothers are allowed to do that. So if you want to know the why, oftentimes behind what macro really is, why weighting is so important, why weighting is so important to why the watch list that we create is the most important thing that we can do, why relative outperformance is something we can measure. If you're looking for those answers, that's what we focus on day in and day out. Because here's the thing, confidence only comes when we understand, right? So if you're stuck in this loop of, Rag, I'm doing things, but I don't really know why. If you think about where confidence is as the end goal, and we all want confidence, right? Because confidence is what allows us to grow our capital. Believe me on that. If we want confidence, we have to understand and then we have to test it. We have to understand what we're doing and then we have to see it working. So think of it as comprehension plus confirmation. And you keep looping around those and finally you start saying, oh, I get why the market does what it does, right? And then you stop chasing, whatever the stock du jour is of the day, which is fine to do. But, then you go find boring things like this. This is GE, right? This is my SMCI. Scalable. Is it going to tank 15% in a day? Probably not. Right? So those are the things that you might say, Rod, so, where are those trends? They're all over the place. They're just not in the places that are going to be dominated by sort of, what's hot right now, right? Parachute pants were really hot once upon a time. Don't want to be wearing them. Yeah. So good stuff. Thank you as always. We can apply these processes to anything, right? But then the question is, the dumb money thing. I'll tell you, the GameStop was a lot of fun, that GameStop saga. I did not have a GameStop moment, but I had a cost. I ended up playing cost during this time. And granted, this is exciting and I get it. So is crypto, right? But please note, I'm going to just squeeze all this in. Is this how we build a career? This is how a career is made? This is what I mean, gang. We don't want to get into this kind of, and GameStop is just sort of a symbol for all these kinds of stocks that have that moment. Now, this was unbelievable. This is an unbelievable moment. But yeah, I kind of have mixed feelings about those things, right, Alex? Because I don't want people to think that's what trading is. It's not. Trading is a lot of patience and a little bit of discomfort. Most traders think it's excitement and it's action. You want excitement and action. I don't know. Play pickleball. All right. Thanks, Alex. Thanks. Yeah, again, thanks, gang. Smash that like button if this is in the least bit either helpful or entertaining. I appreciate it. All right. Let's see. Eddie says I was traveling during the presentation last week. Eddie, if you're on YouTube, which it appears you are, go to the live section of YouTube, and the webinar that I did is there. So if you go to Simpler Trading's YouTube, which I don't know if you're on my YouTube at Raghee Horner, but just go to Simpler Trading's YouTube and then go to live, right? And then you'll see, yeah, there it is. Consistently profitable trader. And I think Lorna Bot sent you the link as well. And by the way, in this webinar, I like to say the real star of the show was not moi. It was TradesViz. It was the tracking software that I use that shares my losses and my wins. And, look, I say it all the time. We talk in dollars and points, right? Because heck, you can buy something for 14 cents and sell it for 28 and run around telling everybody that you made 100%. How about telling the truth and saying you made $14, right? So one of the things that we focus on is account growth. As the Trish boss likes to say, Rog, the best uptrend is the P&L. And she's right. Right? Absolutely. That's what we're all looking to do. We're all looking to grow an account. We're not looking to just have a hit, right? So check it out. Simpler Trading. And I think Lorna Bot pushed it out there. And you can check that out. All right. So let's see here. Anything on AMD? All right, let's pull up AMD. Graham, if I'm looking at AMD, so let's step back and do what we did before. AMD is a part of what, Graham? Yeah, definitely NASDAQ. So let's think index sector stock. That's what the process we use in the mastery. Index sector stock. So NASDAQ, SMH. What's not to like about SMH, right? And then if I'm going to crack open the SMH, let's do this together. Let's talk about relative performance, sector secret style. Am I allowed to buy AMD? What do y'all think? Give Graham a hand for number one, finding an uptrend. And what do y'all think? What else can we buy? Or even better, what shouldn't we buy? Intel, Texas Instruments, ADI. Right? So yeah, let's buy the dip on that for sure. Let's buy the dip on that. And what that's going to allow us to do is take advantage of a little sale in the overall uptrend. It's something that has value. It is on sale. Just because something's down or cheap doesn't necessarily mean it still has value, right? So AMD, I would still say, and really the edge for us in the mastery throughout the year so far has been the fact that mean reversions, if you're waiting for a mean reversion, you're probably pretty frustrated, as would I have been once upon a time, because that was my bread and butter. But we always have to adapt. We always have to say, what's the nature of the market we're trading now? And that's where volatility has really become increasingly important over the last decade to what I do. And the volatility levels, the DPMRs are really outperforming pretty much anything. All right. Absolutely. So thank you, Graham. I like AMD, but it's not the only thing. So if you can cast the net, come back with a lot of different opportunities, now you can watch what has potentially the best follow through. All right. The next is Ford and Verizon. Are there trends? No, not in Ford. Is it above the 200? Yes. I would probably keep this on the back burner. I don't think it's ready for prime time quite yet. Top spin. Verizon's part of the IYZ, so it's telecommunications. This is probably a little bit better, but let's do this. Let's, Rock, can we crack open the IYZ? Yeah, telecommunications are really interesting because they're a quirky and heavily weighted part of the XLC. So I would say right now, top spin, focus on XLC. And then you can see where Verizon is. There's not a lot to like in this group, is there? Right? So this is less about whether or not I like those stocks. What do we like them for? Overall movement higher? What I'll say is sometimes we might have a name, but the question I ask myself is, why would Ford or Verizon get my attention? And then, time frame matters. I'm pulling up the daily. Maybe you're looking at a weekly. I'm not sure. We do that, by the way. For those of you wondering, Rog, we know you day trade. We know you swing trade. But what about longer term stuff? Our portfolio that we've been building in the Sector Secrets Mastery since 2022, we started that in Q3 of 2022. It's up very nicely. We have things like Apple, XLK, XLB, XLP, but think back on where they were in 2022 and think about the patience that a weekly time frame can give you, and trading a lot of the same ideas, the same concepts on a weekly as I would a daily or a 5-minute. It works, right? So maybe that's a longer term conversation, right? That I do not know, but I would say XLC might be a better place to cast your net, right? And then I would say even on top of that, Meta, Netflix, Disney, right? Because XLC and IYZ, which is where Verizon, kind of hangs out, that's where they overlap the most. And then QSMH, right? We got that great overlap there as well. All right, gang, I realize I've run over, but markets are closed. We can hang out and talk markets a little bit longer. As far as SMH goes, and I've mentioned that's the number one weighted or I should say number kind of 4 weighted sector in the Nasdaq. It's where Nvidia of the Magnificent Seven reside. I mean, look what's good. Look what's going on here. And I'll tell you this: if you're finding that you want a piece of Nvidia, but the cost per contract is too cash extreme prohibitive, think about what other names are moving higher. Taiwan Semi, AMD, right? Maybe SMH itself. And these are things that we do in the mastery where I say, how can we get better bang for our buck? And a lot of times the way we would do that is with SMH, right? Trade this over trade that, NVIDIA. NVIDIA is great. Don't get me wrong. It's coming up on earnings, right? So everything in this group is going to get rocked this week. However, in the aftermath of that, we're going to find out if these are still uptrending stocks, and we'll re-engage to the upside. But one of the best ways to dilute a single stock's effect is to go with that broader average, but respect the weighting the stock has. All right. Okay, gang, that's a wrap. As always, thank you so much for being here for Charts and Coffee. I know I ran over a little bit. Check out the webinar. Again, account growth. The webinar was not a greatest hits of my last 4 big wins. The webinar was about what are we doing in 2024? And if you're not getting the results you want out of 2024, what could be the problem? What are those things that you can address to become the trader you can be? This is a very learnable skill. I don't think you're born being a trader. I don't think anyone's born saying, yeah, I want to risk my capital on a regular basis. But there are things you can do. And by the way, you can check out the replay. If you also at the Trish Boss just reminded me, you can catch the replay over at countdowntrader.com. And actually, there's a lot of cool stuff over at countdowntrader.com if you want a little bit more information. I know a lot of folks want to say, Ron, yeah, what are you all about? Check out Countdown Trader, right? If you want to know what I'm all about, check out Countdown Trader. Check out Charts and Coffee, and you'll know what I'm all about and whether what we're doing is a fit. And then a lot of really cool updates. So you might say, yeah, Ron, this is what's lacking. We put it out there for everyone to benefit from. I think retail traders really get the short end of the stick a lot of times. So I want to level that playing field. I don't care what the hedgies and all these fancy folks are doing who are trading billions of dollars and bail each other out, a la what happened with GameStop. No. I'm rooting for retail traders because that's what I am too. Enjoy the rest of your day, gang. I'll see you tomorrow for Charts and Coffee. Markets are closed, but no reason we can't get an edge. We'll be getting the top tier outlook out to our sector secrets mastery folks tomorrow. And then tomorrow, gang, we're going to get to it. So sectorsecrets.com, that $7 trial offer ends today. All right. Be good to each other. I'll talk with you soon.